Hello everyone and welcome to our final tutorial additional resource section. It's been fantastic to have you. We hope you've enjoyed it. Don't forget our format. We have the tutorial questions and we solve them here in this section. You also have the tutorial questions and we hope you follow us as we solve them. But don't forget that you also go over these tutorial questions in your tutorial classes. So this is just an additional section, okay? Just some materials to help you. So we'll go over the questions for this week. I'll go over some, Emma will go over some, and then we'll round up the whole material for the module. All right, so let's look at question 1. Okay, so we're looking at fiscal policy, the tutorial questions. All right, so question 1 says, which of the following is a purpose of the government's budget? And we have 3 options. We have option number 1, so that's I, to help the economy achieve full employment. We have option 2, 2 I's, to finance the activities of the government. And then we have option 3, 3 I's, to promote sustained economic growth. So our options are to help the economy achieve full employment, to finance the activities of the government, and to promote sustained economic growth. So which of the following is the purpose of the government's budget? Ladies and gentlemen, all of them are purposes of the government's budget. So this means that our answer has to be C, which is I, and I. So all of them, okay? So the answer for 1 is C. 2, the question 2 states fiscal policy includes, and then we have a bunch of options there. Of course, the answer has to be C. C states decisions related to the purchase of government's goods and services, the value of transfer payments, and tax revenue. We know that fiscal policy has to do with government expenditure, transfer payments, so benefits and things like that, and of course, tax revenue. So tax revenues when the government taxes individuals, firms, and households, okay? So we know all of this have to do with fiscal policy. You discuss this more in your tutorials. We have talked about it in the lectures, but of course the answer for this is C, or you talk about this question more in your tutorial class. And then we have the third question, 3. It says the purpose of fiscal policy is to, and then we have a bunch of options again. We have A, to maintain price level stability, B, to achieve full employment, C, to promote economic growth, and we know the answer has to be D. All of the above answers are correct, okay? So fiscal policy aims to maintain price level stability, to achieve full employment, and to promote economic growth. So all 3 are correct. 4 states, which of the following is not, okay? So mark the term not a source of revenue for the UK government. And the answer has to be transfer payments. Because if you look at the other options, national insurance contributions, that is a source of revenue. Taxes on income, that is a source of revenue. And then you have D. None of the above answers is correct because they are these sources of revenue. That's not true, okay? Transfer payments are not sources of revenue. They are payments that the payment pays out. So the answer has to be A for question number 4. But of course, you discussed this more in your tutorial class. Question 5 says, which of the following is not a source of revenue for the UK government? And of course, the answer has to be A, debt interest. So interest on debt is not a source of revenue. Okay, that has to be paid out. Question 6 says, the largest source of government revenues in the in the United Kingdom is, so the largest source of government revenues in the UK is, and that has to be taxes on income and wealth, because we all pay taxes. I pay taxes. I hope you pay your taxes, okay? If you have a job, pay your taxes, please, because we need it, okay? So the largest source of government revenues in the United Kingdom is taxes on income and wealth. Then you have question 7. Which of the following is not a government outlay item? The answer has to be B, purchases of foreign bonds. The government does not purchase foreign bonds. That is bought by individuals, households, and companies. Question 8 says, all of the following are government outlay items except, once again, the answer has to be A, purchases of corporate bonds, okay? The government does not purchase corporate bonds. That is bought by individuals, households, and by businesses themselves. Then we come to question 9. Question 9 says, consider the above table with data for the country's government budget. Okay, so consider the above table with data for our country's government budget. This is the table here. Okay, so this is the table that we have over here. Okay, and then we're told the country has government revenues of how much in billion. Okay, so let's look at what we have in terms of our components. So these are taxes on income and wealth, 50 billion, national insurance contributions of 40 billion, taxes on expenditure of 15 billion, other receipts and royalties of 7.5 billion, transfer payments of 60 billion, expenditures on goods and services of 82.5 billion, and debt interest of 7.5 billion. Okay, so how much of this is revenue? So what are revenues? Things coming in. Okay, so we know taxes on income and wealth, that is a revenue. National insurance contribution, that is a revenue. Taxes on expenditures, that is a revenue for the government. And other receipts and royalties, that also is a revenue for the government. Okay, transfer payments are not revenues, the government pays that out. Expenditures are not revenues, the expenditures, the government pays that out. And then we have debt interest, that also is not a revenue, that is a payment out. Okay, so in terms of revenue, we're going to have this 40 and this 50 plus this 40 plus this 15 plus this 7.5, and that is going to give us 112 billion 500. Okay, so that's what we're going to have in terms of revenue. Okay, so that is going to be D. The answer for number 9 is going to be D. And then for number 10, it says consider the above table with data for country's government budget, government outlays equal. So how much is the government spending? So we know what outlays are. Outlays are going to be this, transfer payments, okay, expenditures and debt interest. So that's going to be 60, 82.5 and 7.5. Okay, when we add that up, our outlay 60, 82.5 and 7.5, we're going to have 150 billion. So that is our government outlay, 150 billion. Easy peasy. Isn't that just nice? And that is C. And then the final one, 11, says consider the above table with data for country's government budget. The data shows the government is running a what? So what do we have? Do we have a budget surplus or deficit? We know what the revenues are. Revenues are 112.5 billion. We know outlays 150 billion. So what do we have? 112.5 minus 150, that will give us minus 37.5 billion, ladies and gentlemen. So we have a deficit of 37.5 billion. What you did last week anyway. So we have that as the answer there. A budget deficit of 37.5 billion, and that's the answer for number 11. Okay, moving swiftly on to number 12. It says the government's budget deficit or surplus equals the total tax revenues minus total outlays, okay, which is what we have, revenues minus outlay. And that will give us if we have a budget surplus or deficit, okay? If we have a positive signal, it's a surplus. If we have negative, it's a deficit. That's all you have, okay? Positive sign, surplus, negative, deficit. Okay, number 13 says a balanced budget occurs when what? Of course, for the budget to be balanced, so we don't have a surplus or deficit, we're going to have this, and this would be equal to what? 0. So we're going to have 0 in that case. And then we have a balanced budget when revenue equals outlays, okay? When this is equal to this, we'll have 0 and we'll have a balanced budget. Isn't that just nice? Everything balanced, everything nice, everything all right. Number 14, a budget surplus occurs when what? Okay, for us to have a budget surplus, tax revenues exceeds outlays, okay? So if we have revenues exceeding outlays, we're going to have a positive sign here, and then we're going to have a budget surplus. And then whenever government outlays are greater than tax revenue, then by definition, the government will be running a deficit, okay? So whenever we have outlays being greater than revenues like we have here, we're going to have a negative sign like we have here. And of course, we're going to have what we call a budget deficit, okay? Very easy, very, very easy, right? You could do this in your sleep. And then number 16 Says, suppose the only revenue taken in by the government is in form of an income tax, and the tax rate is 10%. Okay, if aggregate income is 100 billion, government outlays 100 billion, then government budget has what? Okay, so what do we have here? It says the only income taken in by the government is in form of income tax, and the tax rate is 10%. All right, we also know that the aggregate income is 100 billion. So aggregate income, can I write that over here? Okay, so look at what we have here. We have tax rate of what? 10%. Okay, aggregate income, total income is 100 billion pounds. Big money. Okay, and then it says government outlays, so government expenditure outlays is what? 100 billion. Okay, so what is our government budget? Where are we in terms of the budget? Okay, so what is government income? Okay, because our only income comes from tax, so we've been told only income comes from tax, and tax rate is 10%. So government income, which is only in form of tax, would be 10% of 100 billion. That is what? Okay, of 800 billion, sorry. So 800 billion times 10%. What should I put first? Let me put 10% there so it's easier. Of 800 billion, okay? So that is 10 over 100 times 800, okay? Which is 80, right? So that will give us 80, okay? So that will be 80 billion pounds, okay? So what do we have now, okay? So government outlays are 100 billion. So what is the budget here? We're not sure if it's a surplus or deficit. What's our revenue? Our income, revenue is 80 minus our outlay, which is 100. Okay, right? This is in billions of pounds. Okay, so what does that give us? This gives us minus 20 billion pounds. Okay, so it's minus 20, so that is a budget deficit. Okay, so we have a budget deficit of 20 billion pounds. Okay, that's number 16. The answer is D. Then number 17, the sum of accumulated annual budget deficits in excess of budget surpluses and the receipts from the sale of assets refers to what? That is C, government debt. Okay, so the government is owing us. The government owes individuals or the government. That is a government debt. You will talk more about that in your class. Okay, sum of annual budget deficits. So we've been having deficits in excess of budget surplus, and receipts from the sale of assets refers to the government debt. So that's a debt for the government. 18 says if the government has a balanced budget, the total amount of government debt is what? Is constant. Okay, so if the budget is balanced in this year, so the amount of debt the government has will be constant. Okay, of course that's assuming that there's no interest on government debt. So that's C. Number 19 says if the government runs a surplus, the total amount of government debt is what? Is decreasing. So the government has a surplus. So it has a surplus this year as opposed to a deficit. So it has more, so it can pay more. It can pay on its debt. And then finally, question 20 says an increase in government what reduces the government's what? So an increase in the government's budget surplus, if there's a surplus, if the government has more, okay, if revenues are greater than outlays, so we have a budget surplus, that will reduce the government debt because the government will be able to pay up on its debt. Okay, and that is C, ladies and gentlemen. The answer to 20 is an easy C. Okay, so that's it. Emma's going to come and continue and finish your tutorial questions for this week, which is about money. And then that will be it from us. There you go. Do you need me to wipe this out? If I can wipe out some and you wipe out the rest. Okay, easy does it. You know what it says? Yeah, just keep it rolling. Okay, so what are you all going to do now when you finish your introduction to economics?